Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week, we're uncovering a major investment that's hitting all the right notes in the music industry. Private equity titan Apollo Global Management has just invested a staggering $700 million into Sony Music Group. This deal highlights a growing trend where investors are increasingly looking beyond traditional assets such as stocks and bonds and turning into alternative investment. The booming demand for alternative investment has turned the music industry into a hotbed for Wall Street financial heavyweights. With streaming rights and the steady cash flows from music royalties, the music industry has become a magnet for significant capital. This isn't Apollo's first foray into the entertainment investment. Back in 2021, they also supported Upperview Equity Partners, a firm specializing in media and entertainment investments. Apollo's major investment in Sony Music is a clear indicator of how financial powerhouses are capitalizing on the music industry's potential. As streaming continues to reshape the landscape, keep an eye out for more significant moves in this space. Also on Follow the Money, we're dissecting New York Community Bancorp's recent turmoil and how its exposure to office real estate is affecting its bottom line. New York Community Bancorp reported a disappointing second quarter loss that surpassed Wall Street's expectations. The bank set aside more funds to cover potential losses related to its office and multifamily loan portfolio, resulting in an 11% drop in its shares. The decline in occupancy due to the rise of remote working has put pressure on the bank's office loans. Additionally, the high interest rates are exacerbating the bank's challenges. The bank's provisions for credit losses surged to $390 million, significantly above the anticipated $210 million. CEO Joseph Alton mentioned that the bank is actively seeking to sell between $2 to $5 billion in loans. Despite these efforts, a stock rout following a surprise loss and dividend cut earlier this year has diminished nearly two-thirds of the bank's market value. In response, the New York Community Bank's unit, Flagstar Bank, is selling its residential mortgage servicing business for $1.4 billion. This move aims to bolster the bank's capital and reduce its exposure to volatile interest rate environment. The sale of this unit is part of New York Community Bancorp's strategy to shift focus towards commercial and industrial lending. The bank also recently sold a portion of its loans to JP Morgan Chase in line with its goal to offload non-core assets. The bank's struggle with office real estate and rising credit losses underscore a broader trend in the financial sector. As the bank navigates these challenges, its efforts to offload non-core assets and refocus on new lending opportunities will be crucial for its recovery. That's all for Follow the Money this week. Thank you for joining us. Join us again next week in the latest updates in the world of money. Back over to the studio for Trade of the Day.